But what would you say are some of the most important things that you're looking at when you're doing financial due diligence on, say, a business, around the 200 to 500K range or up to $1 million?
It's going to be to sound obvious to say it like that, but you look at the revenue generation, right? So that's going to be your first main important point is understand how revenue are generated. So that means that you break it down between volume and price generally, right? And depending on the business model you're looking at, because if you look at an e-commerce model, it's not going to be the same as if you look at a SaaS business model. Mm-hmm. If you look at a SaaS, for instance, or any business where you have a recurring revenue, recurring clients, you're going to deep dive into understanding the revenue generation per customers. So how long your customers stay, how much it costs you also to attract those customers and to convert them, how much money do they generate over their lifetime. If you switch to an e-commerce business, you're going to be very careful not only about the revenue generation, but about the margin and the gross margin as well. Because you could be selling 4 million worth of merchandise. If you're selling at cost, you don't really have a business. And this is the main thing you want to look at: revenue and how much it costs you to generate those revenues.
I love it. A lot of people, when they do due diligence on e-commerce businesses that they submit to us to review, is they don't know. And this is a cross between financial due diligence and also looking at the marketing and the analytics as well. They don't know what CPA is, your cost per acquisition, how much it costs to acquire a customer, which is so important to understand, to know, all right, how much money do you need to put in to get the type of return that you want to put in as well? And are there some certain things in the funnel or in the marketing that you can do to change to decrease that cost per acquisition or increase the price? I think with SaaS and membership businesses, a lot of people don't put enough weight into, it depends on what you want to call it. You can call it the churn, you can call it customer lifetime value. There's many different names, but I think knowing the customer lifetime value and the churn rate, two really big ones, is that part of the due diligence packages that you look at as well, as looking at like, all right, how long are these people staying in? How much are they paying? What's their lifetime value? When are they likely to leave? What the whole journey looks like. Is that something you piece together with financial due diligence, or are there some other things at play?
Yes, it is. I think it's actually one of the key elements we're going to look at during the financial due diligence. So I think the main thing to understand, which is quite misunderstood on the market, and especially when you mention, for instance, get a CPA to look at your financial, it's great to have a CPA, but I generally do a big difference between CPA, which is more related to auditing the accounts and understanding whether they've been prepared according to the law and according to the financial standard and accounting standard. Financial due diligence is way more analytic. Like for instance, I'm not a CPA, I'm not a CA, chartered accountant, and most of the people I've worked with at PwC and in Big Four in general, who are the guy who do most of the financial due diligence in the world, most of them are not CA, CPA. At partner level, maybe, but until manager, senior manager, a lot of them don't have a pure accounting degree, because it's all about understanding the analytics, understanding the operation metrics, deep diving into the numbers. And at the end of the day, when you're giving like a full report, what you're saying, you're not just showing the numbers, you're writing and explaining the whole story of the company from a financial perspective. Which means that when you do that, you also touch base on the strategy. You explain how the company grew, by focusing on one or several products. How certain product, have a higher margin than others, and how there was, a switch, for instance, in the number of sales in one specific product, which explain why the margin has decreased over the past 2 years, because people have switched to that product, which is lower margin. So you're really trying to build a story and explain it in plain words, on top of deep diving and making sure, of course, everything is in order.